Good morning, ARMR Insiders. Welcome to the morning meeting of the ARMR Investing Way. We're a virtual hedge fund. You're a portfolio manager on the desk, chief investment officer. We're getting ourselves ready for the trading session. We're going to go over day trading, swing trading, and investing strategies, how we're allocating our portfolio. We have 4 primary portfolios that we run at this ARMR virtual hedge fund. You can find them on the website under portfolios. You can find them in the Slack room. I update the Slack room during the day. So we're going to go over what we changed the portfolio on Friday. We're going to highlight a particular group stock. You guys probably already know what it was, what it is. And of course, we're going to round it out with a discussion, a key takeaway. You're going to want to grab a pen and a piece of paper from the day trading on Friday. There's something very important that unfolded Friday. It's classic. It's textbook. You're going to want to write it down. And when you see it, you're going to want to trade it. Okay. So we're going to go over those things. Remember, as a portfolio manager on the desk, it's your job to take the information in, figure out your strategy, and at the end of the day, execute what works for you. You have to be the smart money. All right. I titled today's discussion, Commodities, Commodities, Commodities. They're blowing out. In case you missed it, we're in the midst of an asset melt up all over the world. Here's a monthly chart of gold and silver. We're going to get to that in a minute. What we're looking at right here is the NASDAQ 100. Risk monitor green started here, ripped higher, pulled back, holds the 50-day moving average, starts again, had a great week last week, consolidated right near the highs the last couple of days of the week. This is the S&P, but now I'm going to take you, I don't know, around the world. How about the India stock market? Just been skyrocketing, outperforming almost, I don't know, all other indexes. It's incredible. How about the Chinese market? I know they're the big bad Chinese, right? Oh, they're going to run into Taiwan. No, they're not. No, they're not. This is just a major breakout of K-Web off the bottom. We highlighted this back here at the end of April. It's just skyrocketing now. What is going on? May as well take a look at Bitcoin while we're at it. In the process of the next leg up, this is just Bitcoin iShares. You can look at copper. Copper has gone berserk. These are copper stocks all around the world. So my message for you today is that we're in some type of epic asset class, all asset class, rip higher. And there's going to be, there is now, there always will be a whole bunch of chicken littles running around screaming about all the problems in the world. I mean, we're having an asset melt up and we have extreme geopolitical risk. Let's just start there. There's always going to be something. And the number one thing you have to do if you want to be a better investor and a better trader is turn off CNBC at all. I don't care what the financial network is. Turn it off. They will not make you money. They will cost you money. They play on your emotions of fear and greed. That's all they do. We don't do that on this desk. We are the smart money, you and me. And you know how we do that? It's really quite simple. The ARMR Investing Way is a simple strategy to execute. We read and react to what the market is doing. We figure out where the puck is going to go, and that's where we go. We don't go where the puck is right now, where everyone's jumbled up yelling about it. We figure out where the puck's going, and that's where we go. And here's how we do it. It's a simple process. Really, the whole point of the process is to get rid of all the noise around you that creates misdirection and mismanagement of assets. It's simple. Here it is. Risk monitor turns green. We get max invested as fast as we can, and after 5 days, we shut it off. So look at a chart like this. It's NASDAQ 100, right? Right in here, right in this green area, and certainly this green box right there, I said to you guys, I'm going to have all of my money to work at the end of that day. Risk monitor's green, all of my money gets put to work. Any index money that I want to put to work, any growth stock that vibes off of the indexes, innovative growth names, all that stuff. When the risk monitor goes green, all of those growth stocks, that capital has to be put to work immediately. And the reason is reward versus risk. I want to put capital to work when there's asymmetrical reward versus the risk. The risk is to the stop. The stop is usually the low of the day we're buying, maybe the low of the prior day. It's tight. The reward is unlimited when the market starts melting up. What we do from there is we just manage our success. We raise stops as we go. We can book profits at targets. And let's break this down for a second. There's 3 different styles of management here on the desk. You've got to figure out which one you're trying to execute. Maybe you're doing all 3. But what you don't want to do is conflate them. Either you're day trading or you're swing trading, or you're investing. The risk monitor is a swing trading strategy. So we put positions on as fast as we can when we get risk on. We raise our stops as we go. And at some point, we're going to book some profits at targets. We're going to raise stops and get stopped out. And the capital gets recycled into U.S. Treasury bills at 5%. Risk monitor turns yellow, red. We go to max cash, rinse and repeat. Everything else is noise. What we do not want to do and what we refuse to do on this desk is chase the market. In those green boxes you're looking at, when we were loading up our portfolio, Chicken Little didn't like the market. A lot of hair pulling, a lot of talking about how this, that, and the other problems in the world. Can't get above the 50-day, whatever. There's always a reason. We're the smart money, you and me. We put capital to work at that moment because we know where the puck's going and we're not afraid. We know there's risk in every situation. So we know exactly what our risk is. We put the capital to work. I challenge you, and I know a lot of you are doing this with me, but for those of you who are watching this now, we have a new subscriber from Poland. Nice to see you. Glad to have you. Can't wait to work with you on the desk. You're in Poland. Does that mean like you're trading late at night with us? I love it. What you don't want to do is chase the market. What we don't want to do, and this is what I challenge you, I'm challenging you right now to ask yourself this question. Why are you more comfortable buying stocks now as the market's hitting a new high than you were 2 weeks ago when the market was on the 50-day moving average? Why? It doesn't make any sense. The risk is greater now. The herd is chirping about it. Everybody's talking about it. The puck has already moved there. You should have already put a biscuit in the basket because you should have put capital to work 2 weeks ago when people were afraid of the market, when there were all the reasons why. What was ahead of us? We had a Fed meeting coming up. Oh, we better wait for the Fed meeting. We have economic numbers coming up. Oh, there's going to be economic. We have geopolitical. There's always reasons. If you're swing trading, you execute based on algos when reward's worth risk, and you deal with the results. There's always risk. Somebody runs out and buys the market now. Where's your stop? Stops only work if you buy right. My stop is usually the low of the day I buy or the prior day. If I put money to work today, where's the stop? Low of today, low of yesterday would mean nothing. That would just be a normal pullback in a market that's going up. Okay. So I'm challenging you to consider the type of investor you want to be. If you're a swing trader, you got to put the capital to work closest to the stop when rewards worth risk and live with the results. Okay. Now, what we want to do together on the desk is I say we want to be the smart money. Let me give you an example of what I mean. Let's take a look at gold, for instance. Here's a chart of gold. Okay. Right back here. This is just GLD. Of course, we own different assets, but I'm using gold GLD as an example. Right back here, I'm going to take the Fibonacci sequence off. All right. In that green box on this desk, we loaded up on precious metals. In that green box on this desk, right at the beginning of this melt up, not because I'm predicting the future. I don't know what's going to happen to gold at that point. But what I do say to you is we have an algorithm. It's given us an entry point. The risk is the low of the day we're buying it. The reward's unlimited. We don't know where the reward's going to go. That's the time to put capital to work at the end of February. Now, I'm going to say some things right now. You guys, you might not want to hear this, but I think it's necessary for everybody. I'm reading the Slack room over the weekend. A lot of fundamental conversations about how high gold and silver can go. We're going to get to that in a minute. But I want to just share with you this process about being the smart money and how to do it. Because what we heard last week, Stan Druckenmiller, Michael Burry, right? These are the smart money guys. And all over financial media last week, they're telling you that the smart money's buying gold and buying gold. I'm sure silver too, but they were talking about the gold story. Michael Burry buying Sprott physical gold. Stan Druckenmiller buying gold. And they trot out these stories about the smart money and they tell you, yeah, you got to do it now. What they don't tell you is that the smart money already bought, okay? The smart money put the capital to work and then they go to press so you can mark up their portfolio. And I'm not doing that on my desk. You're not doing that in your portfolio. You and I were buying gold and silver at the end of February. And I said to you then, load up the max position you want at that moment. Now you could trade around a core if you want. We'll get to that in a minute. But load up then when the reward was worth the risk. Now the smart money, they tell you on CNBC, is buying gold and silver, already up huge. Of course they released that story. You think Michael's stupid? You think Stan's stupid? They're going to tell you first, and then they're going to go buy it. Obviously, they already own it, and they want you to mark it up. That's not what you and I do. That's not what we do on this desk. We use algorithms to execute. We put capital to work when rewards worth risk, when it feels most uncomfortable and all the noise is against us. And then we reap the rewards when everybody else marks up our portfolio. And now I'm going to share with you a chart, the highlighted stock of the day, the highlighted stocks of the day, the highlighted commodities of the day. And I'm going to say some incendiary things, but I want you to understand it's not a prediction. And if my stops get hit, I'm gone. I'm not married to the situation. And we already loaded up at the end of February. So we're enjoying an epic run in gold and silver and copper, commodities across the board. I'll show you what I just bought last week, okay? I just added another commodity to the portfolio last week. I'll show you that in a minute. But we're already making a lot of money. Now, the Silver Fox is in there adding ideas to the Slack room, talking about the potential for the size of this market rally. But please remember, he's loaded precious metals months ago, making a fortune. He's sharing with you what he thinks is going to happen. That's great. But if you're just piping in, you're just starting with us, you're just looking at the Slack room, the Silver Fox is not saying initiate a position today. Now, he's earned the right to add more risk if he wants. That's his prerogative. He's earned the right. He's had such a huge move in his net worth. He can go add a little bit more risk if he wants. That's him. So I'm going to say some things right now. We're going to go look at the highlighted chart of the day. This is the monthly chart of gold and silver. And I'm just using GLD and SLV. And I have one question for you. Forget about all the noise, all the stuff you're reading, and all this other stuff. Just look at those charts and you tell me, where do you think silver's going? What you just heard was the mic drop. I've got nothing else to say. We have to read and react. I share that chart with you because there's some of you who've expressed to me, God, we're making so much money. Maybe I should sell some. And my comment to you is, and this is the benefit of what Silver Fox puts into the Slack room, he's sharing with you the powder keg that's been lit and the potential upside. And it's equally as important to ride your winners as it is to cut losses. When you get something right, you have to max it out so that your success as an investor over a long period of time can work for you. If you cut your way, if you get something so right, if you load it up on gold and silver at the end of February and you're getting it so right and you just sell it because you can't stand success, it's going to hold you back as an investor over time. So what I do when I feel like that is I raise my stops. I don't raise them to a point that makes no sense. I raise them to the logical point, and I'll share this with you on the trading desk today. We'll go over each position and say, okay, here's how much I'm willing to give back. And at that point, I'm booking my profits. I'm done. And I'll see what happens next. Look for the next leg up. So I look at that chart with you and I say, look, that's a monthly chart. Silver hasn't even started yet. I know that's hyperbole. Of course it started. It started last month. This month of May. The month of May. It just started. And you can read the Slack room for all of the information Silver Fox is sharing about what may be unfolding in the gold and silver market. But at the end of the day, the smart money put the majority of its capital into gold and silver at the end of April. So anything, if you've earned the right to take more risk and you want to add some new names, I'm not going to stop you. I'm not doing that. So let me be very clear. I'm done buying gold and silver. I bought max positions at the end of April. I trade around a core, the mining stocks I trade, the metal I hold. There is no way I personally would put another penny in the metals as they're skyrocketing. If somebody wanted to buy more metals, you absolutely have to buy weakness. Have you learned nothing on this desk? You have to buy weakness. I've been reading some pretty interesting things in the Slack room. There's not going to be weakness. This is the time it's going to go straight up. Hey, man, 1 out of 10 times that happens. And God knows, I hope it's this time because I'm maxed out. Okay. But rein in the greed. Rein in the greed. If you're going to buy more gold and silver, it's got to be on at least down days, if not down weeks. And if it just skyrockets from here, rein in the greed. Be happy with the money that you're making. You've got to act like the smart money, and it doesn't chase. And God knows it doesn't chase the metals. Those are my thoughts for today on investing. Hope I didn't come out of the box too aggressive this morning for you, but it's just what I've been feeling all weekend. Where's the puck moving now is what we'll have to figure out. And I'm going to show you now 2 stocks that I bought last week. Okay. We own copper. We own silver. We own gold. You know, the commodities are going through the roof. So I've been trying to get back on double energy stocks, right? This is the chart I'm looking at on energy stocks. It's a huge pennant. And you could look at any of the indexes. I'm looking at the ETFs. And if I'm buying ETFs, I mean, that's where I'm comfortable. You want to buy an individual energy stock, I get it. But there's a perfect example. I mean, this is XOP, U.S. Exploration and Production. Massive pennant. There's the first breakout. There's the pullback to the 50. Where's it going next? Take a look at copper if you wanted to get an idea. There's the pennant breakout. It had a tiny consolidation on top of the pennant and it skyrocketed. This has come all the way back down to the 50, set up a base, and we bought it as it closed above we got a risk on entry point Friday in the algo. The lower Friday is the stop. So my risk is limited. And if it takes off from here, I think it's significant. And so I'm using Gush and ERX, which are the 2X energy ETFs. And they own different things. So I just put half in each, and that's how I'm going to play it. But there's many individual stocks that look good in the space. And to me, now is the time to add energy to the portfolio. Okay, this is USO, had the breakouts, had the pullback, made a double bottom. Everything I add uses stops. It takes out the stop. I go back to cash. I wait, try it again, or I take it off my list. And let's round out the discussion with the carry trade. Those of you who are carry trading with me, grab a pen, a piece of paper, write this down. Maybe take a screenshot of this, put it up on your board, put it in your playbook, whatever. Today's discussion is quite simply the importance of the 2-day downtrend. 3-day downtrend, 4-day downtrend. If you get 4 days, I mean, in a down market, in a risk monitor red market, you could have more than 2 days. But in a risk monitor green market, the 2-day downtrend is money. We had a consolidation. You could see it right here. So you just got to remember this. You got to follow along. This is a 3-minute chart. Every bar is 3 minutes. All the lines that you see on the chart are an algo that we wrote called the Price Movement Profiler. The black dots are the VWAPs. But what I want to share with you today is simply price action. If you draw that white line through and you start connecting these tops really on Thursday, and it just extends, right? So I didn't put it through these levels, right? I drew it on Thursday and I let it extend out to the right. And I want you to notice how, so I didn't draw it on Friday. It was already in there. And I want you to see how it attempts right here to get above the trend line. It fails. And it puts in this classic ARMR volume reversal trigger in the green box. So it breaks down with a bunch of volume and then immediately reverses. That volume reversal trigger is money because what it tells you is that they've sold the market off till they get to the stops and they run the stop so it plunges and everyone gets wiped out and then it reverses. And that's the trade. I mean, that's one of my favorite trades. When you put that together with breaking the downtrend, probabilities are at their highest, rewards worth risk, put the capital to work. And that was the rip that ended up leading into the end of the day on Friday. Now, Friday was like a flat day for me. There was a couple of trades I tried early, lost a little bit of money. And then, of course, I was able to make some money back. At the end of the day, I ended up slightly in the green on Friday. But I'm just sharing with you the importance of the 2-day downtrend. This was brilliant. And then when it comes with a volume reversal trigger and a median bar reversal, by the way, in case you're curious what that looks like, a median bar reversal, volume down bar. Here, I'll show it to you and I'll blow it up so you can see it. This is a median bar reversal in a textbook right out of a candlestick charting book. Volume down bar, volume up bar, almost of equal body length. Forget about the tails. It's the body length, almost identical. That's the end of the sell-off and the rally begins. Okay. I'll leave it on that note right there. Have a wonderful trading session. I can't wait to work with you guys. ARMR Report subscribers, of course, you're on your own the rest of the day. Put some comments in the comment section of this video. I'll answer if I can. ARMR subscribers, I'll see you at 9:30. We'll get the day trade going. Day trade, swing trade, invest. We're going to be focused on day trading today. Everything else is already invested. So market's melting up. Everyone else is marking up our portfolio, and we're just going to be moving the stops up. So this morning, I'm going to go over all the stops with you. Every position we're going to go through, we're going to change every stop so we see what are we willing to give back before we start raising cash. And then we just sit back, relax, and watch the show. See how much they want to put the market up. See how much they want to mark up our portfolio. Okay? And of course, guys, don't forget, if you're unable to spend this time on the desk and you'd like for me to do it for you, pick up the phone, send me a direct message. I'm happy to chat and see if that relationship makes sense. All right? Everyone have a wonderful trading session. And at the end of the day, be the smart one.